It's very different than classic venture investing, and is a speculative liquid asset way before it should be.
It does create a very morally hazardous situation.
Yeah, it creates a moral hazard.
Extreme moral hazard.
I don't get it. Like, where do you get the 20% from?
And crypto space in the long term, it won't be just one single winner.
The exponential effect of that is about to be realized. You have to look for big markets.
Depends what you're storing,
You say
right?
it's sexy because the market's big, right?
Market's big, it's sexy. You have two of our venture investors on this table, so just want to make sure.
There's this tension between the retail investors and the VCs, right? This sort of, the VCs are dumping on us and all this.
Which is fair, because that's normally how it is.
The launch team wishes you good luck and Godspeed.
Space monkeys blasting off on venture capital. We have Mark Cachia from Scytale Ventures. We have James Wu from DFG. Rich Shorten from Silvermine and Lucky Friday. And Yoon Kim, the CFO from Sumi. Here to talk about an oft misunderstood part of the equation. Gentlemen, welcome to the show, and thanks for being here.
Thanks, sir.
Thank you.
Good to be here.
Just to start, I think it would be good to kind of define what venture capital is. So I have capital, and I have ventured it forth into various aspects of the crypto space. Am I a venture capitalist?
Venture capital is early stage investing, simple as that, right? I think in truth, all of the people involved in this ecosystem early are to some extent venture capitalists, because they're taking very early stage risks in companies, and they're deploying their capital in support of something that has not yet matured. Right. In the case, of traditional venture capitalists and firms that operate in the space, what you're doing is you're doing a little bit of entrepreneurship and a little bit of capital deployment. Right. So if you think about a complete enterprise and what's required for a company's success, capital is one element to that equation. A management team is required, marketing is required, technology is required. In order to really build an enterprise, you need all of those disciplines. And venture capital brings in the money side, and hopefully can support the other elements too. And that's
As a business school, my professor used to use this statistic, right? Venture investing. And this is at Stanford, so big on venture thing out there. 10 investments, 8, you lose money. Number 9, maybe you break even, maybe. 1, you make money. You better make a lot of money in the number 10 because you lost money or broke even in the first 9, right?
Right.
So that's, to me, venture investing. That's all it is.
Beautiful.
Early stage investing on an idea, really.
Yeah.
And by the way, the funny thing is there's different levels of venture investing also, right? At different rounds, different risk reward, that's it, right?
Right.
And you're taking high risk, and so you better get high rewards if you get it correct. That's what venture investing is.
Beautiful.
I think the point for us to exist is to kind of make the capital more efficient.
Okay.
Because just imagine what VC is doing, what also hedge fund PE is doing is probably giving the money to the smartest people, right? Which can generate return for us. So that's our work. So the best VCs, best hedge fund get highest return. They get more money into our hedge fund, which means that we are supporting the right player, right? Creating the value for us. So we are giving the money to the right people. Mm-hmm. So that's the reason why VC and other PE and also hedge fund exists, is to make the capital more efficient. So that's why we're going to kind of help define which is which is a good project, which is not. It proves if we are wrong, we are giving the money to the right player. So make the capital more efficient is the ultimate goal for venture capital.
Right, and I feel like getting in at this stage, it's a little bit more hands-on than like somebody buying on the stock market or something like that. Mark, I know that you guys at Scytale are pretty hands-on. What's that experience like?
It's very fulfilling. It's very challenging. It's very different than classic venture investing. And it's even kind of a hack of the system or a short circuit, because there's a liquid asset way before there should be, right? And there's a speculative liquid asset way before it should be. And so that's, was really, really lucrative to be a venture investor in previous years. Many venture investors were not thinking about, okay, this is a business I'm going to be in for 5 years and for 10 years. So, this is a team, they're a really good team. They're going to ICO a token, and that token's going to pump, and I'm going to have my exit liquidity.
Right.
We didn't do it that way. We didn't mean to do it that way.
Yeah.
Maybe we partially participated in that when when valuations are completely crazy on the high side, it's irresponsible not to sell into it.
Sure.
I think that's a great point. Like, I mean, as a fiduciary, you have that obligation, right, when those are happening. But the truth is, not only did a lot of those companies, they shouldn't have had, public tokens or
I don't know if
public
they should or shouldn't. They did.
They did.
But they never would if it was
in a normal environment, right? In a normal
Yeah.
environment, they never would have. And I think that attracted a universe of investor stakeholders that really aren't venture investors in the classical sense. It attracted many investors that are much similar to hedge funds and rapid trades. And because they could get a quick turn on their capital, they got involved and called themselves venture funds, but they didn't bring any of the disciplines or experience set that is necessary to withstand a long bear market, is necessary to actually nurture companies across stages of life cycle. And sometimes they did great and they won, but many times they just didn't have the toolkit to operate with earlier stage companies.
In traditional venture investing, the path to liquidity usually takes literally like 8 to 10 years, right? Unless your company gets taken out. It's really hard to analyze on a fundamental level any projects or companies that has that's been around for 1 year, right? They have no revenue really.
Yeah.
And yet they're getting these massive at one point they're getting this massive market capitalization with liquid tokens. And I think that creates it does create a very, what's the term, morally hazardous situation.
Yeah, it creates a moral hazard.
Yeah, moral hazards, extreme moral hazards. And it attracts a lot of bad players also, right?
Yeah. And you're playing this game with all these bad actors, right?
Yeah. So, yeah.
And getting laughed at by them when they're making all this money in Terra. It's like, I don't get it. Like, where do you get the 20% from? And you're investing in that crap, and that's going to take years for people to use it.
Right.
And they probably sold on the top anyway, or sold a lot. And then who's right? I don't know.
And this, in this liquidity, in the world of investing, liquidity is like, number 1, 2, and 3 on many investors' lists of priorities in terms of their investment, right? But here, in these early stage tokens, often the liquidity creates a real problem. It creates a real problem as they go through sort of the phase that you see many projects in today, where they're not yet mature. They now have depressed token values. They had a large universe of holders that sold. There's limited liquidity in the market, and you don't have the same types of mechanics available to you as a project team to be able to raise more capital or move on. And by the way, some other team over here, can just vampire attack your chain and everything's open source, and now all of a sudden it's gone, everything you've built for a while. Wow. So the dynamics associated with preserving, your value creation is perilous as a project team, as everyone here, and as all the teams here know. But the same goes as an investor. I mean, as an investor, you're not even in control of that outcome. You're a sidecar in that project, right? So there's a lot of moving parts that can happen and change very quickly.
Maybe though we could talk about some past successes, even if it's pre-crypto. Do we have any winners? Like, what was the first winner where we thought, all right, I'm a VC?
The success that I realized really formed why I'm in Web3. I have the exact same feeling today as I had in 2000. I came out of the telecom world and sort of the early deregulation of telecom infrastructure in the late 90s and the early 2000s. That's where I cut my chops as the equivalent of like a young project lead.
Yeah.
And in 2000, the world fell apart in telecom and infrastructure, and every company went bankrupt. And I knew in every bone of my body that there was value in these fiber networks and in this infrastructure that was being built, notwithstanding that everything was bankrupt and everyone was running away from it. And I ran into the fire in 2000 to 2002, into that formative stage of internet and telecom infrastructure, and became much more important than I should have been, because I was just like the young guy who was actually standing there, and everyone who was respectable ran away, right, from the sector. And it turned out to be 100% right. It turned out that the growth in bandwidth and internet, everything changed dramatically over the next 5 years, and companies that I got involved in one of the best examples, a company that we took out of bankruptcy at like a $70 million valuation out of bankruptcy. We sold for more than $2 billion, 8 years later, right? Now, obviously, there's a large ecosystem of players involved in that transaction, but you have to be really convicted about something and its ultimate value when everyone around you, and in that era, everyone was telling me, there's a fiber glut. Why do we need fiber? Fiber is useless. Who needs fiber? That was the big story. It's exactly the same narrative as you hear today about crypto. What's it for? What's it going to do?
Yeah.
What's its utility, right? Isn't it all a scam? Same exact same feeling in my bones. And that's why I'm excited about Web3.
Beautiful.
For the record,
Yes.
I've been a venture investor. I've been a public equity investor. Right now, as a Sumi CFO, I seek venture capital. I don't allocate venture capital. My most successful investment is when I, second year to my first hedge fund job, about 20 years ago, I was a public investment, Apple, when Apple was a $16 billion market cap, which sounds ridiculous now.
Yeah.
I missed the second trillion, but this is when they had a product called iPod. It was iPod 3.
Yeah.
It's been out for 3 years and no one's buying it. And I convinced my boss back then to, at the risk of my job, to buy this thing. And it did so well. My former boss back then still owns the biggest house on the water in Greenwich, Connecticut. In terms of venture investing, I guess since we're at Polkadot Decoded, I guess it is venture investing, is my investment in Polkadot in 2017. Kind of like, I'm sure they had pre-sale, but they're pre-offering, ICO. Yeah, they're still private sale.
How did you get involved in that?
I started getting involved in crypto last summer, and then I talked to some people who knew people at Parity, so I got the white paper. And I come from a very Web 2 background. That's how I built my career, kind of like your telecom. And to me, maybe because it was the Web 3 foundation, the Web 2 to Web 3 logic made a lot of sense to me.
Nice.
And I kind of lived through, even the, people forget, although I do worry about future blockchain, in late 90s, even up to late 90s, there's a lot of debate whether Web 2, what's known as Web 2, actually will create any kind of sustainable economic value, right?
Yeah.
Because the biggest app, and it's a great app, to Web 2 was email. And until Google started data mining this, no one was making money on email. And that was the most successful app in history, right? So people are like, and Amazon went public in 1997, people forget that, right? So early, it's been around for a few years.
Right.
They were selling books, and I was using it because I like, it was actually a great idea, selling infinite book choices. But it wasn't like, people were loving it, right? So people are like, what's this good for? So Amazon didn't make any sense, right?
Yeah.
Initially.
Yeah.
So it is from an essence, but yeah, I guess, it was a lot more successful a year ago, but Polkadot's up there.
Yeah, amazing.
Yeah.
It goes without saying that, we're venture investors, we're asset managers, and we need to make profitable investments. But something that's really and truly successful is something that achieves usage. It achieves adoption. And that will always drive value anyway, something that people need to use or don't even know that they're using under the hood. So that for me will be a really successful investment. And maybe we won't make a crazy amount of money on it. For me, okay, that's okay. I really am in it for, the journey. And fighting through the adversity, even though it's not fun. I have gray hair now because of it. But to really be part of it, and that's, for me, what a venture investor is, right? To be early, to work with the team, and to really be active with them on a person-to-person, on a personal basis, rather than as you get later stage investing, if you're a public equity investor, maybe you attend the quarterly meeting, maybe they have to put IR on the phone with you if you're a big enough investor, but otherwise you don't have any interaction with the company.
Right.
And with the management team.
Can you drill down a bit into specifically what it is about Polkadot that gave you this sense that this could actually have an impact on the world and people who use it?
It was lucky for me the way I got started. So the guy that I co-founded it with was a friend of Gavin, and Gavin co-founded his company called Grid Singularity, Ed Hesse. I don't know if you've interviewed him, but if you haven't,
No,
you
but
definitely should.
I keep asking. He says 6 months. 6 months.
Okay, so that 6 months will come around in 6 months, I guess.
Yeah.
And so we were also investors in the private sale of Polkadot, and he was really building from first principles, informed by the Ethereum experience, and so others are also informed by the Ethereum experience, but not the way Gavin works. Right?
Yeah.
So he saw what worked, and he saw what really didn't work, and he baked that in, like, to the fixes for that into Polkadot from the beginning. And what he'll always say is, like, it takes a really long time to build good, complex tech. And we're only seeing the fruits of that now as it's actually just becoming, like, wide-scale usable.
Yeah.
It's better to be in a smaller ecosystem where you can make a difference with $250,000 checks. Like they make a difference in this ecosystem, right? James and Mark are obviously investing sort of at the larger, the later stages and the larger things. But often it's hard, right? I imagine it's sometimes hard to find places to deploy large amounts of capital into these smaller ecosystems because they're not grown up enough for it in many cases. Many of the companies aren't. So being a relevant frog in a smaller pond was an important part of the thesis. For us getting involved here. That plus interoperability and the other elements.
I think also in the right place is also important. I think what Polkadot deliver is really a great vision in the crypto space, because not all the people can have the ability to building a layer 1 chain, right? But they have good or unique angles which can supporting them building that, but they don't have the technology about building it, right? So if you go outside and just simply copy the code of Ethereum and building that doesn't make a lot of sense, right? So what Polkadot and potentially Cosmos as well offer is a tech framework to you, like Substrate and Tendermint offer tech framework for you to build a layer 1 chains much easier than you expected. Then you can do whatever you want to build your ecosystem on top of that, right? So I think that is actually a step forward and a great progress in the crypto space. And since we all probably agree that in the crypto space in the long term, it won't be just one single winner. It will be multi-chain coexist together. So you need eventually the cross-chain solutions to some certain degree, right? We have all the bridge being hacked during the last bull run. It almost proved the business model of the bridge didn't work, right? So instead of doing that, we need to have more. Eventually, we need to have more like a new solution to solve the problem, right? So Polkadot is potentially one potential solution for that. So I think that's the beauty of Polkadot, but we still need to do a lot of work to make it better.
Gotcha.
Yeah.
Do you guys get any flack from your friends who aren't invested in Polkadot and don't understand what's going on? Like, what's the temperature and the vibe about Polkadot for people outside?
From friends.
All the time.
No friends.
I have a very good friend. We grew up in the hedge fund space together, so I'm not going to mention his name, but he basically heads one of the big layer 1s out there. Obviously, he's not as convinced as I am about the future of Polkadot. So I think sure. Sometimes he kind of tolerates my opinion about Polkadot. But,
okay.
Yeah, but much as I have respect for him, I'm not sure his project's doing any much better either. So.
Right.
I think there's a lot of this is vantage point, right? So we work with some people who are traders. Their mentality is a trader. They are traders, and for a trader, Polkadot is not yet a great ecosystem to be involved in. It's just not yet relevant, right? So it makes complete sense for them to say, well, like, when is this going to become relevant to me? But what I will say is they're paying attention. Like, they listen to the articulation of the vision. They understand that technology has long-term impact, and they have a placeholder there, and a placeholder in their conversations with us. When you mature to our phase, and maybe when then maybe it's relevant for us, right? Until then, we'll watch. But as a trader, I wouldn't be involved in Polkadot if that's what I did for a living.
Sure.
That's what,
Okay. Interesting.
I think a lot of friends of mine, like either in VC space, developers, whatever, they have different kind of feelings about Polkadot. For example, the substrate, the tech framework, it's really, probably the most unfriendly ones to compare to other layer 1 protocols to the developers, right? So the learning curve is very steep. It's really hard to kind of like using substrate, right? So actually, but the point is, once you use it, then it works very well, right? So actually, the barrier for the developer to move into the Polkadot space is relatively high. So that's actually one problem I noticed, which probably potentially need to be solved in the future. Then more developer can come into place. I mean, Rust is already hard, right? So, but it's the case. But at least there's something we can do better to kind of improve this, right? Cosmos, I think Cosmos is probably the most friendly one. Solana is not good, but Polkadot is the hardest, right? So this is one thing. The other thing is about like the capital side. I think, because the ecosystem, in 2020, 2019, the ecosystem grew pretty well. There are a lot of new good quality projects, especially for the first few Polkadot projects, are really high quality compared to other ecosystems. Yeah. I'm not saying Ethereum is also very high quality, but if you take a look at the other layer 1 ecosystem, I mean, Polkadot project is much more good than this kind of project. I think that is good things, but I think the momentum start to lose track a little bit in the recent years. But I think this could be improved. It's like a more good quality project moving to the Polkadot space, working with Web3 Foundation or Parity together. Then we will, with this kind of good quality project, then we can attract more VCs or capital to move into the space to invest into them.
Gotcha.
Right?
Yeah.
Very often it's like when people, I tell them I'm Polkadot-centric investor, like, Polkadot's dead. I've heard that, and I'm like, and then I feel like I'm the guy in the meme, where it's like they don't know, and it's the ones dancing, and they don't know what Polkadot really is. Like, oh, the crowd loans, that's not a good system. Oh, the inflation's too high. Oh, whatever thing about Polkadot they don't like, and they don't know what it is. They don't know it's by design governable, upgradable, and changeable. And just like Gav revealed yesterday, well, maybe this is a path forward to open up block space, to make block space on demand. And that's an important fundamental change of the way to access block space on Polkadot.
Polkadot's not an ecosystem for the casual developer or the casual investor.
Even the other, they just have a frame that this is the protocol, that's how it works, and now you can't change it because you can't change the other ones, right? Now Cosmos is great. I meet a lot of people that love to develop on Cosmos. Cosmos needs shared security, but they can't have it the way Polkadot has, like true shared security. They have like replicated security. It's not the same.
Yeah. When you point to investor friends that challenge Polkadot, one of the things that I cling to, that I point to a lot, is we've learned over the past 15 years how powerful network effects are to value creation, right? That's a generally accepted principle. Polkadot, obviously, its architecture is sort of by definition a network architecture. But then when you point to and you look at the chart that we've all seen, the Electric Capital report that shows the developer activity, there is an effect that will begin, and I think we're beginning to see now, that will begin to ripple through from that activity. It takes time, but the exponential effect of that is about to be realized, I believe. It may still be 2 years for it to fully, unfold, but, that many developers working in that many different projects, in that many diverse applications is going to be impactful.
I feel like there's even like a willful ignorance or a willful blindness. I listened to quite a few pilots and talking about, the SEC is suing, and they called this a security, called that a security, and then it's a podcast with, some investors, and they talk about, this shouldn't be because they have a bag. They don't mention Polkadot and the path that it went through, even though it's out there. Why it was not mentioned? Why I believe it was not mentioned? I don't have the inside story, but I really feel like, well, they didn't participate. They're not in it, and now they're going to be willfully blind, and they'll have to pay attention, but they'll pay attention at a very different level.
Something I'm hearing a little bit about lately, parachains or projects building on the Polkadot technology, they're pretty starved or hungry for funding right now. What are some projects we're really excited about building on Polkadot, not the core Polkadot, but building on Polkadot that you guys are looking at and thrilled about?
Well, I'm working for one, so...
Network.
It is a decentralized storage solution, right?
Yeah.
The funny thing is that as the kind of the MBA and the team, I did a lot of the market research, and you guys know most of these names. Guys like Filecoin, Arweave, Storage8. There are a bunch of decentralized solutions out there, right? And I'm not exaggerating. These are essentially unusable solutions. They're not solutions, right? I mean, if you got 2 NFTs and you want to upload, and you got afternoon to do so, and maybe you download it like every 6 months, then Filecoin's a great choice, right?
Yeah.
I'm not even, and then rest of it, I'm not even a good choice. The pricing is really odd. So because our founder, our CTO, comes from a very deep storage background and blockchain background, we built a storage layer that we think is architecturally better than what incumbent cloud guys are built on.
Yeah.
We're talking about AWS S3 product, Google Cloud Storage, Microsoft Azure, right? So we think we have the first decentralized storage solution that is obviously better than other decentralized solutions, but I think it's better than AWS.
Wow.
So we're excited about that.
Yeah, sure.
And we have a bunch of projects that want to use Sumi, right? Because AWS is a huge cost, and plus it's centralized.
Yeah.
So you have a decentralized protocol with a centralized important component, kind of.
And cheaper.
Yeah.
And cheaper.
Cheaper than Amazon.
And I think there's not enough appreciation of how large these markets are. The storage market is absolutely enormous. I wish I had the data point to be able to point out, maybe you do, but
Yeah, I think I do remember this. We just did the overview. I think it's growing at about 30% CAGR, see compound annual growth rate for the next 5 years. And I think market's going to be close to, I forget, like $400 billion in 5 years.
Numbers, yeah.
Right.
It's simple, man. No one ever deletes anything from their phone, really.
Right, yeah.
So memory use keeps going up.
Sure.
And one thing about AI, which is a big deal, it's going to involve a lot of data storage, right? Unstructured data, actually. And so, yeah, it's just no one's deleting anything. We need more storage space. It's a huge market. And in the meantime, the incumbent players, the Amazons of the world, they're in a trap. It's like a golden handcuff. Their margins are extremely high. They do really well. They do so well that they haven't had the need to update their architecture in 20 years.
Wow, yeah.
So in a lot of sense, they're outdated.
Yeah.
And not because, we have an awesome dev team, but because we're building it now, we're able to use technology and algorithms that weren't available 14, 15 years ago.
Yeah.
So it's better architecture. So I think,
and storage, not particularly sexy, right? But that's where the economics are evolving. That's where, and this is as a venture
It's a big
capitalist, you
market.
have to look for big markets.
Depends what you store
You
it,
say
right?
it's sexy because the market's big, right?
Market's big, it's sexy.
That equals sexy.
And the incumbent guys are, despite them, they're scary names, right?
Yeah.
You hear
Sure.
like Amazon, Microsoft, Google. And literally, there are no worse incumbents to compete with in human history.
These businesses didn't even exist 10 years
Exactly,
ago,
but
right?
they're disruptible.
Yeah.
They're very disruptible. And it's funny, if you follow the sector like I do, there's a lot of complaints about the pricing and the service from Amazon and so on. So we think we're in the right place, right time.
Yeah.
And certainly, we think we should be the de facto storage standard for all the Web3 companies out there because we are decentralized.
Fantastic.
And our product works.
Absolutely. I think if you're buying some NFT, it will be interesting. You will see some, if you check the code of some NFT project, it will be stored on a random like AWS or whatever.
Yeah.
So are you truly owning that NFT, right? So it's a really question why you're paying 10 Ether for that, right? So eventually we need kind of decentralized storage to solve the problem of the NFT. So that is just one single example about how decentralized storage could be useful. And I totally agree that the solution right now is Filecoin, Arvis, whatever storage is, they are good, but they do have a lot of problems. I think Sumi will be a potential very, very big player in the future.
All right.
For the record, we have two of our venture investors on this table. So just want to make sure. All disclosures.
All right.
A project that we really love. I would say two. One, very briefly, our Teddy Dow charity project, A Lucky Friday.
Yes,
we love that one,
let's
right?
Go. Yeah.
Just a charity NFT project. All the proceeds go to charity. We did it in partnership with Just Giving, which is the second largest online donation platform in the world. It's live on Moonbeam now. Simple, buy a teddy bear, choose which charity you donate to.
That's cute.
And we literally just launched it a few days ago and hoping to get some, we have lined up some traditional media coverage, with the design of doing something good, but also, bringing visibility to Polkadot and to Moonbeam and to the ecosystem, right? And it shows sort of the simplicity. It was built as a Nouns DAO fork, and so it shows the simplicity of deploying on Moonbeam, EVM-based applications. So we're excited about that one. But in terms of depth of, engagement, we really love the Interlay team and the Interlay project and what they're building there. They are, if Alexia is a phenomenal team. They are They are solving issues not just as it relates to sort of Bitcoin and decentralized finance generally. They are addressing issues that are sort of core to Substrate and Polkadot itself that affect many different parachains. I think they're great advocates for the ecosystem, and the elegance of introducing Bitcoin into the Polkadot ecosystem, I think, is a very important primitive to the evolution of DeFi.
Absolutely, I love Interlay too. Mark, if I can bring it up, you guys just led a huge round on Mythical.
Yeah. And then, so this is, I really believe, something transformational. And transformational for Polkadot, and then transformational for businesses to see that blockchain really makes sense. It's going to be 1 million new wallets as soon as they're set up, even more than that. They have 1.1 million downloads already. There's a NFT wallet behind the game that the user doesn't see right now, but they can interact with on their marketplace, the market already.
I'm a bit of a gaming skeptic, not because I don't think gaming is a hugely impactful area, but because I don't know myself enough about the industry to be able to identify winners and losers. But I'll say that presentation, just a few hours ago, was
That's
phenomenal.
compelling.
It was spectacular. Like, this is a transformative project to the Polkadot ecosystem. He's obviously a very sophisticated and well groomed CEO, for the enterprise, and it felt like the kind of presentation that you see at a Goldman Sachs Investor Day for a technology conference, right? Like, it was a maturation moment, I think, right?
And it starts with gaming first.
Yeah.
And gaming where blockchain makes something better, or makes an aspect better. Not where you have some token that you want to shill and let's make a game so people buy the tokens.
Yeah.
Which is not, long-term successful.
Yeah, no, I told John the game is so good I had to take it off my phone.
The drag racing one?
Even Canadian.
The NFL one.
Oh, the NFL one.
Yeah. It was. I lost a weekend there and never get that back. But it was so great.
Yeah, they make good games.
Yeah, totally.
And
James, what are you watching?
Yeah, I think there's a lot of projects we invest in both primary market and secondary market, right? So also, especially for All-Star and Moving, I think these two projects are super great. I see a lot of potentials for these two projects. These kind of people's passion about Soda's project is brilliant. So I can feel that how All-Star is going to be super popular in Japan. Not only because it's a good technology, good platform, because also Soda can, make sure, everyone knows All-Star in Japan and use the platform. This is also very important. So I think All-Star is going to have a very, very bright future. And moving as well, if you listen to Derek's pitch like yesterday, it'll be amazing.
Sure.
There'll be a lot of great application on top of moving, with with not only DeFi, NFT, GameFi, whatever. I mean, we also see a lot of great projects built on top of that. And right now, if you check the secondary market or price of moving, it's relatively low, right?
Yeah.
So I think for us, we've been more flexible about what we can do on the capital side. So we've been doing both investment in the private market and investment on the secondary market. Yeah, but not financial advice for that.
I was just thinking that maybe some of our viewers may take these comments as like market signals or something like that, and there's this tension between the retail investors and the VCs, right? This sort of toxic narrative of the VCs are dumping on us and all this, right? And
which is fair, because that's normally how it is.
Right.
That has been true.
Sure. Okay.
Well, it has been true. But we for our second fund, we changed so for the first fund, people invested euro, and they had to get euro back. This one, we changed it. That after we return the initial capital, then the investor can take in kind or not. Because for stuff that is still so early, with so much upside, the fund has a limited life, I'd rather hold it. And I'll advise our LPs to hold it as well, but it'll be up to them, because maybe some won't want to deal with crypto. So we'll get out of that issue of getting dumped on. And the only reason that it is an issue because there's not inherent value creation yet, right? If there is a business creating value, then it's not dumping on somebody anymore, because it's no longer greater fool.
Right.
It becomes, here's something that is creating value. I want to participate in it, or I don't want to participate in it. But then somebody else will have some metric beyond, somebody else will pay more for it.
Yeah.
afterwards. And then I think we will see that. And in many aspects, NFTs as well, especially, having these collections and cool, you want to flex and all of that, but having them, what is the right value for something like that versus an NFT that actually confers some kind of usefulness, right? Besides having a PFP.
Yeah.
Right? Do I have access to my favorite musician? Can I flex in a game because I have this NFT? And they're not going to be worth like tens or hundreds of thousands of dollars, but they'll have real meaningful value for people.
Maybe we could speak directly to the retail investors. Is there one piece of advice or a change in mindset that you can offer these traditional retail investors caught in that buying too late and selling too late cycle?
Nope. Because I think most of the people are just in it to make some fast money.
Okay,
so the utility of crypto so far has been to gamble. That's the real utility.
Yep.
Okay, I'm going to buy something, I'm going to flip it at 5x, I'm going to buy something else, and that's going to go 100x. And we don't do that.
Yeah.
So we're not going to be in the stuff that's interesting for these types of investors. We're going to be in stuff like Kilt, for example.
Yeah.
Very useful and very unsexy. But they announced Deloitte, and they had the next few days they had 30 incoming from large corporates say, "Oh, we're interested in using this," and I think that's happening. I think something like Mythical being successful on Polkadot will drive many followers as well.
Okay, interesting.
Yeah, I think one thing I'd say.
But no advice for retail.
Yeah. I think understanding, putting in the work to understand the difference between what you think is an attractive project with a good idea and an attractive token. Those two very often do not correlate. You can have very attractive projects with unattractive tokens. And frankly, vice versa is the case sometimes too. That's an area that I don't think gets much attention from almost anyone and really deserves it.
Good stuff. Yoon, what would you say?
The only thing I share is the same thing that I'm always trying to work on.
Yeah.
I think the most difficult thing is being self-honest and self-knowledge. And in my career, I think when you do that right, it helps with all your decision processes. Nothing's wrong with trying to be greedy and make money in a quick trade, but you have to recognize for what it is. Mm-hmm. But in the meantime, let's not forget, I'm not investing anymore. I'm building now. So maybe that's some indirect advice.
As I said, when you find something that you've diligenced, you're thoughtful about, you've made that analysis, and you're convicted on it, I would say that in my experience, where I've had success in the past is when you're really convicted about something and you really think that you know it better and you've thoroughly analyzed, you understand the risks, that you lean onto that. You focus on the things where you really do have conviction. You may be involved in a lot of things, but you dedicate your attention to the things where you're really convicted. You know it better than anyone else.
For a retail investor, the right way, arguably the right way to access the stock market is to buy an ETF, low-cost ETF on the S&P. So for a true retail long-term investor, something similar to that in crypto, some kind of ETP, exchange-traded product, is probably over the long term the right way to go. And then all the normal things you do, like scaling over time, so you're always DCAing, so you're never paying too much or too little, and you're always building your allocation and exposure to it. That's probably the right way, but it's definitely not as thrilling.
Right, yeah.
I think for an retail investor, so it's really important about doing your own research, and this is important because if you really trade a lot, you dump the token, pump the token a lot, then you will feel you probably will feel very smart, right? So when you buy the token and sell the token, but eventually when you just calculate the returns in a much long-term way, right? So if you calculate return in a full cycle or probably 2 full cycle, probably even longer, 8 or 10 years, then you will realize probably finding the right asset and holding the right asset is probably the way to give you the highest return, right?
Right.
So I bought Bitcoin back to 2014. So I do a lot of investment, basically using Bitcoin to do a lot of investment. And after I calculate these kind of return, then holding Bitcoin gave me actually the highest return, right? So this is actually one single example that I'm not saying my investment is bad, but just calculate, just like giving you guys an example that finding probably for the retail investor, finding the right asset and holding it for at least a full cycle is probably the right choice for at least for most of the people. When you heard about a story on Twitter, I make how much money I trade meme coins, that's only 1% of them.
Yeah.
Right? 99% people
And
losing money, they are not trading anymore, right? That's not even true. So,
Exaggerated.
so if you only see that top 1% traders, probably on traders that kind of tell you the stories,
Top
right?
1% trade of a trader, right?
Yeah, that's true. That's right.
Tell you when they lose.
So it's not real. So
Selection
probably,
bias, man.
Yeah, selection bias. So it's probably the best way is to really own, holding the valuable asset in the long term, right? So that's my advice. Yeah.
Amazing.
Go buy
Well-
Polkadot. That's not advice either.
Well, look, this is a super high value podcast and conversation
That's it?
here. Yeah, what else you want to talk
Finished?
about?
I don't know.
One more
It
thing?
feels like we're just getting started.
Maybe we should all get together again in the bull market and see if our
thesis
answers
held
have
true.
changed.
Yeah,
Have changed,
absolutely,
yeah.
absolutely, yeah.
But thank you all so much for being part of here and providing the capital to this ecosystem that we need to grow. It's extremely important. So thanks
you,
so
guys.
much.
Thank you.
Thank you.